In this video, we're going to explain how to get approved for a mortgage in Canada. It's a question I get asked a ton by people buying a home, whether it's buying your first home or buying your fifth home. The mortgage landscape has changed a ton over the last number of years. So even if you're an old veteran at this, things are probably quite a bit different than last time you went through the process. So today I have with me my partner, Kevin Graham. Kevin is an excellent realtor in the greater Calgary area. Hi, Kevin. Welcome.
Hello, hello. Hey, Glenn, thanks for having me.
So, Kevin has spent more than 2 decades working in the mortgage business. Before he was a realtor, Kevin worked for one of the major banks in Canada, which shall remain nameless on this video, and it has also worked as an independent mortgage broker. There's not much Kevin hasn't seen. So we thought we'd get Kevin to come explain this process of how best to get approved for a mortgage in Canada. Before we jump into that, Kevin, can you give us a little bit of a background on your experience? And two, can you answer the question, why to get pre-approved?
All right. So, background of my experience. Yeah, I worked for a major bank for 16 years. Then I went for a mortgage brokerage for, I guess, 12, 13 years. So, combined 29 years of banking experience, mortgage experience. Yeah, it was interesting. I left that to go into foreclosures and was doing that for 3 years. And that was foreclosure property management. So kind of been in the real estate industry for a long time in different aspects and stuff. I have to say my favorite mortgage I ever did, I was in Vancouver, and I swear I did it. I did 3 mortgages, and in Vancouver, this was 20 years ago. So yeah, Vancouver wasn't as crazy then, but it was still crazy. I did 3 mortgages for what I called was a bag lady. She literally went out and collected pop bottles and stuff, and that was her income. She was a little Chinese lady, and so she had a house, and it was all paid off, and then she came to me, and I got her mortgages for 2 rental properties and with no income. It was the funniest thing, the best story I've ever had over doing mortgages. And that was a blast. You can't do that nowadays. You really, I think the mortgage landscape has changed considerably. That was prior to the whole United States fiasco, mortgage crisis and housing craziness in 2008. The Big Short and all that stuff that movie was based on. So that was my claim.
That's a crazy story, Kevin. I was making through my list of contacts and trying to see who might qualify for that kind of mortgage, but I guess you can't do that anymore.
Yeah, no, you can't do that anymore. But it was my biggest claim to fame. I was quite proud of that. It was just she had literally had $10,000 income that she claimed, and it was funny. So as to now, okay, so yeah.
So
getting a pre-approval,
I guess. Yeah, is the first question we have.
Yeah. So yeah, that's what I mean. Those mortgages don't exist anymore. So you really need to, a big thing about getting approved or pre-approved is knowing what you qualify for. It's just, you could go look at $1 million house, but if you don't qualify to buy it, then there's no point in doing it. Right. So, people in even a $500,000 house, if you get a pre-approval and you find out, I only qualify for $300,000, a $300,000 house compared to a $500,000 house is a huge difference. It's almost no comparison really. It might even be an extra bathroom or bedroom, might even be a whole extra level, like a second 2-story house compared to a bungalow, or a 50-year-old house compared to a 20-year-old house. It's just a huge difference. So with pre-approvals, not only that, you got to factor in your credit. You might have a collection you have no idea about, that's sitting on your credit bureau for the last 5 years, that will impact you on getting a mortgage. So, having somebody pull your credit, really analyzing it and getting that inspected and recommended. Like, you might say, oh, well, yeah, I don't have anything bad on my thing, but you might be one of those people who you use your credit cards like every month, you max them out, but you pay them off every month, and that impacts your credit. You might have 2 car loans. You might have, hey, I've got this do not pay for the couch I bought for 18 months. That impacts your credit. All of these things impact your credit. So, like, you need somebody to guide you through that and to check it out and give you advice on what you could do with your credit to, if you don't qualify now, to make it better in the future. Also, another thing, pre-approval, was like, you need to know how much of a down payment you need. If you're getting to that $500,000 stage, like, you need a bigger down payment. You also, with mortgage brokers or mortgage specialists, they should be going over the incentives that are available to you for buying a home that the government provides. Like, even I don't know all the incentives. They change all the time, and especially with COVID, the extra money they're throwing out. But it's that kind of stuff. Then you got to factor in your income. Okay, well, hey, how much income do I need for the certain type of house that I need to buy? Does the income that I bring in, do I qualify with that? Because as a self-employed person for the last 20 plus years, the income as a self-employed person, yeah, your gross revenues for your business are one thing, but your personal income, what you claim, is a whole nother thing. And what the banks look for is your personal income. Like, there's no budging anymore. They basically say, okay, what did you claim as personal income? And that's the income we could use to qualify. So let's say I had $100,000 in business revenue, but I only claimed $30,000 in personal income. So what I could qualify using that income is considerably less than whether I'm like, oh, well, I made $100,000. So that's a big thing that you need to know with your income. And, even I was talking, my wife is working for Alberta Health Services. And so she hasn't been 2 years in it. And so she wants to buy a house. And I'm like, well, you can't, because you need to have at least a 2-year record of how much income you've been earning with that. Even if you do have they call it a line, but a guaranteed number of hours and that kind of stuff. Like, that's all something that needs to be factored in when it comes to getting a pre-approval. And it's really important to have that kind of stuff, because, yeah, you go and look at a house and you go and make an offer on something, and then you find out you can't get financing. Well, that you got egg in your face right from
It's
that,
heartbreaking, right? Too, right? Fall in love with the place. And I see 2 things quite often. You see people that don't want to go start that process with the pre-approval. They either fall in love with the place, and then they're heartbroken because, hey, I can only get approved to $350 and this house is at $380, and we just can't make that price work. And the second thing is they get out there in this fairly hot market we're in now, and then they find a house that they love, that they could qualify for, but they just don't have all their ducks in a row, and someone else is able to scoop it out from underneath them before they can buy. So it's really important. And you're outlining like a whole bunch of reasons why you need I'm just like, whoa, my head is spinning. It's like, there's so many reasons why you really need to get a mortgage professional on your side. And just really briefly, but before we jump into the how, why should somebody pick a highly qualified mortgage professional versus walking down the street into their local branch?
Okay, so there's 2 factors to that. And I have to be very careful, obviously, because I'm not licensed as a mortgage broker anymore. So I can't really talk mortgages, but so I have to be generic. I can't mention
So
different.
why
But
would you go to a mortgage broker rather than walking down the street to a local branch?
so a mortgage broker, in my eyes, they have access to like 40 different lenders, 30 to 40 different lenders. So I like instead of you going into one bank and then walking down the street and going to another bank, and each time you go to a bank, you're actually getting a ding on your credit bureau, which is a bad thing. Like I met some clients. They had like 10 banks they went to, and they had all these inquiries on the credit bureau, and that brought their score down from 750 to below 700. And people don't realize the impact of inquiries on your credit bureau. So that was one factor. Another factor for going to the big banks, and this is something that people don't realize, prepayment penalties. Is like, you can Google it. It's a crazy amount
I've seen
of
the huge
prepayment penalties.
numbers.
Like some of the big banks, the way they calculate their prepayments penalties is you'll end up having a $30,000 penalty
I've
if you
seen it.
want to get out. And people are like, oh, well, that's okay. I'm going to buy this house. I'm never going to move. But that's not the reality. The reality, the statistics are that people move every 2.5 to 3 years. And it's just like, no matter what you say about, oh, I'm going to live in my house forever, there's a very small amount of people who actually stay in their house forever. And so if you're moving in 2.5 to 3 years, but you're in a 5-year mortgage rate, you're stuck with that bank. And let's give the last 1.5 years, for example.
It's been a little unpredictable.
Right? Like you had rates that were up at 4-5%, which is still half of what the 40-year average of mortgage rates were. The 40-year average was up at 8%. I remember I got my first mortgage in 1995, and it was at 9.125. And I was happy. It was like, I worked for a bank. I was like, I thought I was getting I was getting a preferred rate back then. And then people, probably 15 years ago, when the rates dropped down to like 4.79, everybody's like jumping on it. It's like, oh, I got to get a mortgage. I got to get a mortgage. The rate is so low and everything like that. And now with COVID, like people were getting rates below 2%. And it's just right. And it's just like a variable rate mortgage right now is so bloody low and stuff. And again, I have to be careful on what I talk about. But so variable rates are okay because your prepayment penalty will only be 3 months interest, basically 90% of the time, 95% of the time. But you're in a fixed rate mortgage, you lock in, and let's say you were at 4% before COVID. And then all of a sudden now, you want to go to the below 2% rate mortgage. Well, you would have a penalty to get down to that. And the people who have moved, because it's just like, hey, interest rates are so cheap, I can now buy a $500,000 home when before I could only buy a $350,000 home. So, but then they're really, and it's like, oh man, I got to eat this $30,000 penalty. So 100%.
So they should be planning ahead.
Yeah, and get away from the big, and I hate to say the big banks' prepayment penalties, but that's really what it is. When you've got a specific mortgage lender who isn't one of the big banks and who are really there just for the client compared to trying to you make your shareholder happy and all that stuff, you go with a mortgage lender, their prepayment penalties are considerably lower. Well, they'll use 3 months interest, which, maybe only $3,000 compared to $30,000. And that to me is a no brainer. Why would you throw $27,000 away for a prepayment penalty just because you're loyal to where you've had your bank account for the past 30 years, where they've been making service charge off you? Like they haven't been doing you any favors the last 30 years. Yeah, they may say,
we need to be planning for that unpredictable world that we're living in now, and know that although we plan to stay there forever, we know that 2 years, 3 years, 5 years, we may need to move, and we don't want to get because I've seen lots of people where they can't sell. They need to sell and they can't sell because they have these 20, like 18, 20, 25, $30,000 payout penalties. It's brutal.
Right. And you think of what's happened during COVID. I mean, Amazon before COVID was big, but when everybody got locked into their houses and couldn't go anywhere, how many Amazon orders, like even in our household, did we do? Right. So, I mean, I don't think I've gone to a Walmart for 2 years. It's just like, oh, I need something. I'll order it from Amazon. And it's just like, so why don't you do that with your mortgage?
Right.
Right. Your mortgage, your real estate, like everything nowadays, like people are Googling, people are YouTubing. Mortgage was the number one Googled word. I think it's been that way for the last 5 years. And the second one is real estate. Yeah, mortgage. People Google, how do I get a mortgage? And it's just like, so, and I talked to a client, I'll give you a example. I talked to a client on Friday, and they had gone to their bank. They got pre-approved, and it's like, great. You know what? That's fantastic. And I said, I was in the mortgage broker industry for a long time, and I just said, there is some benefits to talking to, just to see your options. Maybe you go with your big bank, but find out your options. And so they went and talked to a mortgage broker friend of mine, and they said, like this makes so much better sense because it does give me more options and it does save me money. And that's a big thing. And, and when I worked for the major bank, and it's just true, like people bleed the loyalty. They do. They just go, I'm loyal. This is where I've always banked. My parents banked here. Like, they gave me my first account. They gave me my first credit card, and they bleed that. But when I was in the bank,
it doesn't go both ways, right?
Right. And I really, and I hate to say this, but I was in the branch, and I'm doing investments, I'm doing accounts, I'm doing loans, I'm doing mortgages. Everybody was just kind of like a number to me. It's like, okay, what's your order? How can I help you? Okay, here, boom, get out of here. I got to get on to the next one. And it's honestly, and for the banks, and they are worse today, where they're just about getting the products for you. It's just like, hey, you going for a mortgage? Well, we'll give you a line of credit on top of that because we want you to have 3 to 5 different accounts with us. So right. Just having a mortgage, and
so they get a bonus on their stats or their paycheck.
Exactly. Whereas mortgage brokers couldn't give a flying hoop. They're like, we're not going to give you a line of credit. We're not going to give you a credit card. It's just like, this is a mortgage. So that's why we can offer you a better rate. This is all we do is mortgages. And we don't have an interest to try and sell you anything else. And so you got to be careful about that stuff when you go into the bank, because they have a hidden agenda, and that is to get more products based on your banking profile. I'm sorry, I went on a
Kevin,
rant.
if we've got no, that's all good. This is all great information, and all of us will probably want to rewind this and watch this a couple times because I was like bit like drinking from a fire hose. But for today, can you we should probably do some more of these and guys, if you have questions about mortgages or other things that we're not covering on the video, just leave them in the comments below, and we'll go back, circle back, and make more videos to answer those questions for you, because we're just trying to imagine the questions that you would have or answer the questions that we get on on a daily, weekly basis. But for today, can you answer us, just walk us through what it looks like? So, if I'm coming to you, Kevin, and say, look, I'm trying to buy a home, and what do I need to do to get pre-approved? What do I need to do to prepare? Is there documents I need, or what do I need to do? And what's going to happen? How does that process happen?
Okay, so preparing, obviously, whatever mortgage person you talk to, they should give you a list of what you'll need. But to prepare ahead of time is obviously the big thing is income. Get a pay stub, get a T4, get your tax return. And not just one, go back 2 years, 2 to 3 years. Pay stubs, get 2 to 3 pay stubs. Try and get your year end pay stub. So like if you're going in January or February to get a pre-approval, get your end of December pay stub, because that'll give basically how much your pay was for the entire year. If your down payment, I mean, it's a factor. You need to have 3 months not interest, 3 months history of your down payment. So if you bought an RSP in February, you've got to have that money in your RSP for 3 months. Otherwise, the banks won't look at you. So you have 3 months bank statements. You have 3 months our investment statements, RSP statements, that kind of stuff. You're going to need that to be prepared, because you can't just say, oh, well, I've got $20,000 sitting in the bank account. Okay, where'd it come from? Oh, I deposited it 2 weeks ago. It's like, okay, well, you need to give the details of where it came from. It's like, oh, well, I ended up getting a loan. Bing, 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 bing. All these bells come off, right? Because you can't get a loan for your down payment, like not officially. But
I've seen that, Kevin, literally where people had $20,000 under the mattress in their house. And you're like, you got to get it in the bank, because as far as the bank's concerned, that money doesn't exist. You have to see 90 days history on it.
Right. And not only when you add cash or put cash in, you have to know there's rules to how much cash you can deposit without setting off flags. So the best thing is to keep it under $5,000. For sure, it has to be under $10,000. Otherwise, you will get flagged. You'll have to fill out a form and say, okay, well, like, this is, where did this money come from? And anyone with cash, who knows where you, like, you know, if you've been taking money from your paycheck, $100, and then you just cash it, like, yeah, you got to be careful with cash, because they track that stuff, because you're a drug dealer or you're doing something illegally that you got all this cash. So down payment, you need to have that. Knowing what your credit is ahead of time, or knowing, you know, do you have if you need it, do you need a cosigner?
So for credit, how do people check what their credit is? I know that some, you know, one of the bank that I deal with, I can go on my online banking and I see it all the time. Like, here, click here to check your current credit score. How else can people track what their credit score is, and what does it need to be?
They can actually go to the credit bureau themselves. Equifax or TransUnion are the two ones in Canada. They can go and pull up a credit bureau from themselves. They can have their credit monitored by the credit bureau, which is important nowadays, especially with all the cyber identity theft and that kind of stuff. It's probably a good idea, because you never know when someone has applied for something under your name, and it's you want to keep track of that stuff. Yeah, and like I mentioned about having a collection from 5 years ago that you don't know about. It could be for something as small as you had a cell phone bill that you switched from one carrier to another, and you owed them $20. It's still a collection. It's still,
you know, that literally happened to me. It was like 25 years ago. I had bought or was it 30 years ago? I bought a dishwasher. And for some reason, at the end, I paid the thing off. Nobody ever sent me a notice, whatever. There was $15 outstanding, $15. Nobody sent anything. But literally, back at that time, I applied for a mortgage, and this popped up. It's like, oh, well, we got this thing on your credit for over $15.
$15, right?
So I quickly mailed them off a check for $15. But yeah, it was an issue.
Yeah, the stuff comes up for sure. So, and then other things you need to be prepared for. Just be prepared to answer questions and be truthful. It's going to get found out. There's no point in trying to say, oh, well, maybe they won't find out about that loan. Maybe they won't find out that, oh, I took a sabbatical for 6 months, and so my income doesn't reflect. Like, they will find out. So you're better being upfront and honest in your pre-approval interview, because it's just like, okay, I had this. I don't know if it's an issue or not, but let the mortgage professional deal with it. That's their jobs, right? Like, and it's just so that's a big factor as well.
Okay, so preparing all the documentation, primarily your income and your down payment. Those are the really big things that you're going to need to have, whether you talk to the mortgage professional first or not. But just know, you just go ahead and start collecting that stuff. You're going to need that for them. Any issues you've got with like any glitches in your credit, any glitches in your income, you're better to just shine a spotlight on it than you're just trying to hide it, because you ain't going to hide it.
Yeah, and so, sometimes people don't even realize that, let's say they bought a brand new car and it was a lemon, and they just said, you know what, they gave it back to the dealership, and it might have been years ago, and in their mind they're like, well, it's not an issue, like it was, I gave it back, it was a lemon, and it was just like, and they ended up giving me a new car and to replace it. But lo and behold, that shows up on your credit bureau as is it a repossession, or it's something, or voluntary
Voluntary surrendering or something like that, yeah.
Something like that. But it's a negative ding on your credit bureau. And I had that where I'm just like, I had to fight with the lender. I'm like, look, they gave the car back. It, like, the engine, it was a known problem. Like it was a recall. And so, yeah, it shouldn't be a negative impact, but that stuff does impact even, but you have to be able to explain it. And some people don't even think about it, that it would be a problem. And so they're like, okay, well, then they find out about it after the broker pulls the credit bureau, and they're like, oh man, now I got to deal with that kind of stuff. Right. So.
Well, I think we're kind of running into our time there, Kevin. I really appreciate you coming on. It's a huge topic. Just one of the really basic parts of, I want to buy a house. One of the basic questions is, how are you going to pay for it? So, and a big chunk of that is, although, over the past 4 or 5 years, I think I've done a number of people that are paying cash for their home.
Wow.
For most of it's not a reality. So a huge chunk of that is going to be, how am I going to get a mortgage?
Yeah.
And as mortgage rules have tightened up over the past 3, 4, or 5 years, it's becoming like a bigger deal. So we've just barely touched on the surface of this. And I really thank you, Kevin, for digging into, I mean, you've got I know over the years we've talked, you've got a plethora of experience, and you can just keep pulling out stories of all the weird and wonderful things that happen in mortgages. And some of them are pretty hilarious. But in much of that, you've learned so much. So if, reach out to us when you're ready to start that process of buying a home. The first things we're going to do is we'll do a brief interview, and we're going to help get you connected with a mortgage professional. And get you started on that process. It's the best way to get going on the process. And we tend to refer you to mortgage professionals. We deal with a number of them, mortgage professionals that are experienced and that are really honestly looking out for our clients, well-being, for our clients' interests. So please leave your comments below if you have comments on this video, and particularly if you have questions, other things you'd like to see covered. And you can also contact us through the website. Thanks for being with us today, Kevin. And hey,
Thanks
look
for
forward
having
to
me.
talking to all of you soon.
Sounds good.